half-hour breakout method, and then I'll stop after that, and then I'll answer your questions, and then I'll talk about the truth about trend, and then of course I'll answer your questions, and if after that I'll pretty much be done, so you can ask me on both. But just to make it easy, let me just go through this quick and give you more specific details on each, show you a bunch of examples, show you today's examples. Today was a great trading day using both of these methods. And the way, okay, David, you're recording this, right? I just want to make sure this is being recorded. David and Craig, right? You're both recording this, I'm assuming.
Yep.
Okay, good. Good. So again, the order I chose to talk about this presentation, it goes in the flow of these two methods. The first half hour, right? And then once that sets up, then it gives us the setup for the truth about trend, and the whole truth about trend, the market flow begins that whole method. The first half hour, and then the truth about trend. Okay. Good. I'm just reading a lot of comments. I've got my window open. I can see everything coming in. And pardon me if I get a little distracted, but I'm trying to read as I'm talking and giving you as much as I have here. So, yeah, I mean, one of the questions, can you actually trade with what I'm giving you here? Absolutely. You don't need anything else on your charts. Everything that I'm showing you here is enough for you to trade. Okay? Simple works. This is the basis of a lot of what I do. It is the core structure of my, my methodology. Let's see. Okay, I know you guys are starting to do a lot of give me a lot of questions. That's fine. But let me just go through this. Okay, first half hour breakout. Let me go through this first. So there's my little mug here at the bottom right hand corner. We're going to talk about the first half hour, and I'm going to change this screen and let's start talking about it. As you know, you've already watched my video on the first half hour and I've explained it, but I've got this in more detail for you, and then I've got some more specific rules in the next slide. Okay, so basically, remember, once the market moves in either direction off the open and proceeds to penetrate up through the high of the first half hour or the low of the first half hour, okay, that gives you the entry. Let's look at this illustration here down below. I've got three illustrations. The one to the left here, basically the market opens up, comes down, puts in a low, then puts in a high. You see that I've got 10 o'clock right here, right? So it opens up at 9:30 right here. Right here is 10 o'clock on this bar. So at that point, you're simply looking at the high and the low, the first half hour's range. It's that simple. Okay, so you're waiting for the market to either break down through the low or break up through the high. It's that simple. Okay, so the chart's not showing. Hey, Craig and David, can you guys see my chart?
Yeah, I can see it.
Okay, so now it's okay. Chart's fine. Yes, okay. I just want to make sure you're seeing it. So the first slide here on the left, all these three illustrations are just the first half hour is what you want to be aware of. Okay. So basically the market trades down in here, doesn't take out the low, and then finally comes up. Once it penetrates up through the high, you'd have a resting buy stop order. Okay? It's that simple. Okay? So let's talk about buy entries. If the highest high, right, of the first 30 minutes is penetrated first to the upside, go long, right? You never want to buy on double zeros or halve numbers, but rather you're going to buy on 25s and 75s. So if this high right here, for example, was at a 0.75 on the E-minis, okay? Instead of going one tick above 75 to double zero, you go up to 0.25, and that's what would be your buy stop. Here, first half hour right here, kind of a trading range, breaks up to the high, you go long. In this example, right, 9:30 is here, 10 o'clock happens to be here. The market never took out the high, but rather took out the low. Once it took out the low, you're going short on a sell stop order. Again, you don't want to enter on, 0.50s or rounds. So if this low was at, let's say, 25, you want to go one tick below it. That'd be a double zero. You don't want to go there. You would instead go 0.75. It'd be 2 ticks lower. It's that simple. That's the entry. Very, very simplistic. Remember what I said in my last video, the first half hour is pretty much a sucker's game. I typically don't do anything in the first half hour. I want to see what the market does in the first half hour. I want to establish the high of the first half hour and the low of the first half hour. And wherever the market breaks to, you can take a trade in that direction. And 80% of the time, the market does give you a full point from your entry, which is $50 per contract on the E-minis. And, you know, I mean, that's 80% of the time, and on days where you have announcements, it's closer to 90% actually. So in this illustration, this slide here, we got rules behind this, and then we're going to go through a bunch of chart examples. Okay. Now I don't wait to 10:03. It's the 10 o'clock bar that's formed. Okay. Again, I use a 3-minute chart, so 10 bars in is 10 o'clock, and once you penetrate either up through the high or the low, the highest high or the lowest low of the first half hour is when you enter the market, and that gives you the actual direction of the truth about trend as well. We're going to get into that after. You know what? I've never used this on stocks, quite frankly. I've only used it on the E-minis and the Dow. It works as well. Okay. So the initial stop loss, okay, that's important, right? When you get in the market, you want to protect yourself. So basically, initial stop loss, right, I call it the ISL, the initial stop loss, and that's basically the catastrophe stop. So when you go long, your sell stop order is going to be placed below the last pullback before the buy entry actually occurred. So let me show you an example of what I'm talking about. So let's just, okay, the market opens up, kind of goes up a little, down, whatever, okay? So let's just say this is the range, okay? That's the highest high, that's the lowest low of the first half hour. If the market goes up through the high, and I'm long right here, my initial stop loss is going to be below the last reactionary low, okay? Follow me, give it a little bit room. So if that's the last reactionary low, that's my initial stop loss. Now, of course, if I get in, I'm given a point and I'm taking profits. If I'm only trading one contract, I'll take profits. But I trade multiple, so I do I shoot for 1 point and I look for 2 points, but I trail up my stop, and I'll get into that in a minute. So on the excuse me, on the opposite example, if I go short, what if the market never took out the high, but instead it moved down from that level right here, and I'm short here? My initial stop loss is going to be above this high, which is the reactionary high right there. Okay, that's my initial stop loss. Now, of course, I can go into more detail. If I get into the trade and I get a bearish or a bullish outside vertical bar, let's say I'm short here, and I get something like this, right? An outside vertical bar is where you take out the prior bar's low and the prior bar's high. We close up in here, I'm out of the market right there. Same thing here. If I'm long and I get something like this, a bearish outside vertical bar where it closes in the bottom quarter and the high of the bar takes out the prior bar's high and the low takes out the prior bar's low, that's an outside vertical bar, and it closes in the bottom quarter, I'm out. Okay? Profit objective is very simple. From point of entry, I'm looking for a minimum of 1 full point. That's 80% that you're going to get that. Excuse me, 80% of the time. Okay? Second profit objective, if you want to nail another profit objective, that'd be 2 points. Obviously, the percentage of getting 2 full points is going to be less than 80%. I believe it's, I don't know what the percentage is, maybe roughly 60% that you hit 2 points. Trailing stop, let's see. Let me erase these. Here we go. Trailing stop. So let's just say market's doing nothing. That's first half hour. It breaks up through the high. Okay. A trailing stop would be if I'm getting consecutive higher highs and higher lows. Each time the market takes out the prior bar's high, I'm going to move my stop up to below the prior bar's low, up to below it. So it takes out the high, moving my stop up to below that low. If it makes another high, moving it up to below that low. Not at the low, but below the low. That would be my trailing stop on a long. Below the prior bar's low once the prior bar's high is taken out first. Well, okay, one of the questions I'm seeing now is a lot of risk for a point. Well, you don't know that because you don't know where the last reactionary low is. But there's no doubt a majority of the time you're able to move that stop, so you're risking less than what the initial is. Sometimes that initial risk is in fact larger than that full point. But you've got to look at the last reactionary low before you get into the trade when you're long, or the last reactionary high when you're short, and then move it accordingly according to each of the bars. So it's not necessarily a lot of risk because you don't know that. We'll look at some of the charts and take a look at that. No, I take one of these. You can only have one of these trades a day. You can't have multiples. It's just, again, don't make it any more complicated than it is. You get the initial half hour's range, and when it breaks through up or down, that's your trade. That's the only trade you take. Okay, let me go to the next chart. Let's look at today. This is today, right? Market opened up down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right here is 10 o'clock, right? That's the range. High, and then I drew the line on the low, right? Look at this. I mean, this is like beautiful. I'm not cherry picking anything. I use the last 6 days. Today, yesterday, and last week. So let's just take a look at what happens. Look at these examples. When the market took out the low of that first half hour's range right here, you're short. I mean, look at what the market did. You would have made money on that, right? Full point, like immediately out of the gate. And then you could have trailed up your stop, okay? And you would have trailed up your stop once the market took out these identical lows right here. You move in your trailing stop if you trade multiple contracts to above this high. Now once the market took out these lows right there, you're moving it up, down again. As it takes out these lows right in here, you're moving it up. Right? Takes out these lows, took out this low here, move it up to below, above that high, and move it down accordingly. Okay, so again, it's irrelevant on how many contracts you trade and how you, but I'm showing you how to enter, where to place the stop, and how to trail it. So it's really irrelevant how many contracts and how you work it according to that. It's got to match your personality and temperament. I'm just showing you a method that works.
Hey, Todd.
Yes.
I just want to interject, if it's okay. There was a question about whether or not you can trade this on other E-minis. In the room this morning, we also traded this on the NASDAQ and picked up 20.25 points, which is equivalent to $405 with just 2 lots.
See, that's good. So yeah, it works on the NASDAQ. It definitely works on the Dow. But again, my big thing is the E-mini S&Ps. I mean, that's my baby. It's, you know, I've traded the S&P since 1988, and of course the E-minis, when they were introduced in the fall of '97, I switched like everybody else to the E-mini. So that's really my baby. But the NASDAQ and the Dow certainly works. I mean, like, a lot of my students trade those markets as well. So how do you anticipate a pullback? I got lots of charts here I'm going to go through. Okay, and then I'll take some questions. You know, Craig, if you want to answer some of these questions, that's fine. Let me just go through a couple charts, but I just want to stay focused here, or it's going to go forever. Look at market opens up here. Count 10 bars. This is a 3-minute chart. 1, 2, 3, 4, 5, 6, 7, 8, 9. Look at the 10 o'clock bars here. So where are you looking to go short? Right here, as it takes out that low. In fact, the market dropped exactly from entry, right, 1 tick below this low, 2 points, right, before it bounced, right, $100 per contract on the E-minis, 2 points exactly, boom, 1 and 2 before it bounced. So that's a beautiful example, okay. Now when it took out that low, okay, where's your initial stop loss? Initial stop loss, I would place it above these 2 double highs. Whatever that price is, 1 tick above. As long as it doesn't fall on a 0.50, I'd go above it. That's my initial stop loss up in here. My initial catastrophe stop. And if you're going to trail this down, as it makes a lower low, your stop would be moved to here. As soon as the market right there took out the prior bar's low here, your stop would be moved down to above this high. Comes down, right? Once it takes out this low, I'd move it above this high now. So it's almost a break even on the remaining portion of your position. I'm a big believer in taking profits though off the table. If you're trading multiples, you've got to take profits off the table. Because if you're always looking for that home run trade, you're going to find yourself giving back a lot of money. Now look at this example. Again, beautiful. Right? I'm just going each day back, right? I believe this is last Friday. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 o'clock bars here, right? So, right, if it broke up through the high, I'd be looking to go long. If it breaks down through the low, I'm looking to go short. Market did not take out the high, but instead it took out the low right there. So you go short here, okay? Boom, and as soon as the market dropped down through that low, your initial stop loss, or wherever you stick your stop, which the last reactionary high, I'd put it above that high initially as it breaks down through the low, back a couple bars through the highs. Now on this move, quite frankly, as the market is making lower lows here, okay, and you're short right there, I'd go back, I would say 2 bar. If you don't have a real obvious reactionary high, obviously this high here is too high. You don't want to stick your stop up there. So if the market's moving down like this, because it's got momentum behind it, you're getting lower highs, 1, 2, 3, 4 consecutive lower highs. So on this bar that got you into the trade short on a sell stop below the low of the day, you can go back above the 2 bar ago. 1 and 2 bars above that high, actually. You can stop right above there, because you've got some momentum going down. And as you can see, the market move lower. Okay? Again, you would keep your stop there, and when the market took out this low here, right on this bar, okay, now granted, the market never took out this low until right here, but I would still, seeing this big bar down and an inside vertical bar and another inside vertical bar, I'd move my stop down to above that high. It never took it out. And once the market right here dropped below this low, at that point, I'd move my stop down to above that high. Broke down through these lows right here. I'd move my stop down again above those highs. Never took it out. Finally took out that low again here. I'd leave my stop above there, and you'd be taken out on a trailing stop right there. Make sense? Trying to be as detailed as possible here. Now look at another chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 o'clock bars here. Again, I'm not cherry picking these. These are this chart started today, and it's going back every single day. So I'm not going back and picking out only the days that worked. So you got to remember that. It's important. Okay, I'm getting a lot of comments, good comments, and I really do appreciate it. I'm glad it's helped so many of you already in your trading this very simplistic little scalping method. I mean, who says that you need to sit there all day? After this trade is, you could be done for the day, right? It says you got to be glued. You certainly don't have to be glued to the screen. So let's count the, okay, 10 o'clock here. Look at, this is it. You're going long right there. I believe on this trade, I don't have prices to the right here. Once it broke through, it rallied here before coming back. Craig, do you recall, did the market run up 2 points here? This was, I believe, last Wednesday or Thursday. It was either 1.5 points or 2 points to the tick from entry to where we entered here. Do you remember that? Do you have the chart in front of you? What's the price of the entry and this high here?
You would have been in. You would have been in at. Oh, hold on a second. I got to move some stuff out of the way. You would have been in at 7 1/4. The market ran up to 9 1/2. So yeah, 2 points.
Yep, 2 1/4. Gave you 2 1/4 from the breakout. So this is good. I got a couple of comments. I got one guy that wrote in out of the. He went back and he tested the last 10 days, and basically 7 of the 10 made money. I'm assuming really only 7, huh? Okay. That was hit at least to 1 full point. Okay, as it did. How do you know but breakout is going to work or just poke over the? Okay, how do you know the breakout is going to work or just poke over? Well, you never know, right? If I knew, okay, how do you know the breakout is going to work or just poke over resistance and fall back? I mean, if I knew that, I'd never be wrong, right? You never know if a trade's going to work out. It's a probability game. You just have to stack the probabilities in your favor. So there's no way you can ever know that. If you did, I mean, that's the age-old question of trade. How do you know if it's going to work or not? You never know. It's a probability game, and the probabilities in this trade setup are definitely very high. Okay, so on this particular trade, the market hit both profit objectives to the upside. Now, if you had trailed up the stop, where would your trailing stop be? Quite honestly, go to break even right here as it took out this low right here. Right? But it hit your 2 profit objectives right there. And if you trailed it up, if you had remaining portion, as soon as the market came down and it came back up, you're sitting in this little descending triangle. I'd get out right there, pretty much break even on that one. Let's go to the next chart. Right, I agree. If this method works so well, then why bother complicating it with indicators? Well, I don't really complicate it in my other methods. I've got other things that I do look at. I mean, this is a standalone. You don't need to trade anything else. And I really don't complicate things by looking at a few of my other things. Okay, I'm going to call it strategies. It's a methodology that I've got a few different strategies that I use throughout the trading day. But no, it definitely does not complicate things. Again, look at this one. This is a perfect example of the market opening up and doing nothing but going straight down. 2, 3, 4, 5, 6, 7, 8, 9. Look at the 10 o'clock bars right here. The short came in right there. And Craig, what did the market moved exactly 1 point in your favor, or was it more than a point? I don't have prices.
$11.10 was you'd have been in at. Hold on a second. 375. Market went down to 175, so exactly 2 points. So market if touched orders would have been filled.
There you go, baby. So look at, is the market, okay, the market puts in the low at 10 o'clock here. You got 3 to 4 minutes to put in a sell stop order below the low. A sell stop order with a resting buy market if touched order at maybe 1 point and another one at the 2 points. Again, it depends on how many contracts. I don't need to go into. I mean, it doesn't matter. Whatever you're trading is fine. You know the profit objectives. You know how to enter the market. If you're going short, based on this method, it'd be a sell stop order. If you're going long, it's a buy stop. If you want to put your, and I suggest putting in your profit objectives as soon as you put in your stop orders to enter, right? So right up in here somewhere, put a sell stop in as entry, buy market if touched at the point minimum. And the market rallied up and actually went the other direction, but still hit your profit objectives before you got the bounce. It doesn't matter if you have 3-minute bars, as long as you have half hour. Did I go back or what? Okay, here. Let me take this off right now. Let's see. Yeah. It doesn't matter if you have 3-minute bars. You just need to know the first half hour's range, right? If you have 30-minute bars, right, it's a 30-minute high and low. If you have a 1-minute chart, right, 31-minute bars, doesn't matter what you have. Trying to erase this before I go over it because I obviously marked it up prior to this. I can't do it. Whatever. Basically, the first half hour range, right? This is the high. This is the low right here. 1, 2, 3, 4, 5, 6, 7. It's 10 o'clock bars right here. Took out the high. You're long right there. Right? Market pulls back a little bit before running right back up. Again, I'm not sure. Wherever you went long here, I believe the market gave you. How much was that, Craig? A point, point and a half before it came down completely?
Yeah, we got a point. We actually got a point out of that. And then it came back and...
It did go, it went a full point.
Yeah.
Craig, can you see, do I have another chart? If not, I'm going to answer a couple of questions. Do I have one more chart, or am I, let's just see. Okay. I'm going to talk about truth about trend next, but let me just answer some questions. Chart, it's what, 6 5-minute charts. A 1 point profit in E-minis translates into $50 per point. Let's see, why 30 minutes? Why 30 minutes? I've noticed, I've been trading for over 22 years, and that first half hour I've always felt was the least reliable and predictable. I just find that it's just, again, it's not, I just want to wait for the market to settle down. It usually occurs after the first 30 minutes. Once you set that range, once you break out of that range of that first 30 minutes, it typically gives you a movement in that direction, and oftentimes the market trends in that direction. Now, does it trend in that direction for the remainder of the day? I don't know. I would say 55 to 60% of the time, once the market does penetrate through the high or the low of that first half hour, you've seen the low or the high of the day. Meaning, that first 30-minute range, if you break up through the high, you've seen the low of the day, which would be the low of the first 30 minutes, and vice versa. Again, I don't have an exact percentage to that fact, but I would go as far as to say probably at least 55% of the time that the remainder of the day will be in that direction, or at least it will not take out the opposite extreme of that first half hour. Take this. God, I got a lot of questions here. Look at what is the latest time of the day that you take this setup? I mean, look at this always occurs. I don't remember the last time where you put in the first 30-minute range and it never breaks through that range until the afternoon. I mean, I don't think I've ever seen that. So usually, 85% of the time, that trade is triggered between the 10 o'clock and 11:30, I would say. Yeah, it doesn't matter if you're in a bull or bear market or sideways market. I mean, this is the first half hour, and once you break, this is an intraday play. I personally use TradeStation for my charting, but there's a eSignal, Ensign, Ninja. There's so many charts out there to work on any chart. Yeah, it works now. When it is. Okay, man, I don't know if I can. What if there's news at 10 o'clock? That's a good question. No, the news is good. Craig, don't you love that trade? Once we have news at 10 o'clock, the probabilities of that trade even goes up to like 85, 90% actually.
Yeah, chances are there's usually. I was just answering that question. Chances are there's usually some more follow through on it. So it's a nice way to go in with 2 lots or more at least.
Okay, I've got, let's see. I don't trade the Forex using this, quite frankly. Again, there's no doubt that your risk goes up if you trade the news because it does get more volatile typically, but as long as you've got an initial stop loss in mind and you put that in, you know where your entry is going to be typically, and you just got to throw that in immediately. Yeah, the profit price, yeah, you got to put your profit target in immediately as you put the entry in. Okay, I don't use multiple time frames on this. Again, it's the first 30-minute range I'm looking to buy or sell. 10th bar is 10 o'clock. The 10 o'clock, once it's over at 10, it's the 10 o'clock high. Yeah, if the profit objective of one full point is hit, I've got my initial stop loss, and I may or may not move that. It just depends on what the pattern is. So it's really a trade by trade type of setup. Again, okay, I got a question about like on the 10th of November. You're saying the 4.5 point initial stop loss. Look at, quite honestly, if you don't have any reactionary highs or lows before entering the market and the range is quite large, then what I would do is you're going to go, again, I'd have to show you on a chart, but the bar that gets you in, you got to look at the prior couple bars highs and put a stop above it. And if you get any type of reversal pattern, if you go short and you immediately get like a bullish outside vertical bar, or even if you get an inside vertical bar and you take out that high, you may just want to scratch the trade altogether. You don't want to risk, you obviously don't want to risk more than 3 points on this trade. That would be the absolute max. So you want to use the individual price bars to be able to place your stop. So if you don't have a reactionary high or low, then you've got to use the price bars. Okay, you can be showing the trend. Okay, let's see. Okay. So now let's talk about the truth about trend. Most of you have watched the video on that. Pretty easy stuff. Basically, it's the core price structure and the rhythm of really all the markets. And to successfully trade the markets, you need to understand the underlying movements and the rhythm of the markets, the highs and the lows. Again, I don't need to read all this. I think you guys can read this. But the truth about trend is all about pure price action. Okay. Next chart, let's see. Again, as you know, there are three primary waves or trends to the market, right? You have an uptrend, which is simply a series of higher highs and higher lows, right? Higher lows I call active lows, and I'll go through that. In a downtrend, you get lower lows and lower, what I call active highs, which are the lower highs. And of course, the sideways market, we have relatively equal highs and equal lows. And you just have to be able to identify which wave you're in. So without the use of any indicators or oscillators crossing up and down, you can tell this with great accuracy and look to take these reactions. And to start this entire process on a day-by-day basis is really the initial range, which is the first half hour. That's why we discussed the first half hour breakout first. And again, the market flow method, which is the truth about trends, it's based upon the upside penetration of market highs and the downside penetration of market lows to confirm that downtrend. Okay, so again, let's start the entire process. Okay, so right in here, the initial swing. So we're going to say 10 o'clock, right? We're waiting for about 10 price bars to create the initial range, high and low, right? Once we break up through the high right here of that initial range, what we're calling an initial range, which is really the first half hour break, when it breaks up, we're saying that the trend is up now. We're starting in that direction. Okay? Now, one little caveat here is, when you learn this, and I'm going to show you it here, I call coming into the day fresh, like the continuous market flow without looking at the Globex, the overnight session. I'm looking at all of yesterday in conjunction with today. Now, if we're going against, okay, if we're going against the continuous market flow from the prior day, then I will not automatically buy or sell in that direction typically, okay? So hopefully that makes sense. Let's see. All right, so on this middle chart, pretty much you just have a narrow trading range here, right? High and the low, first half hour, break up through the high. That's telling me that the trend is going to probably be up, so I'm going to look to buy it on a pullback. As long as again, I don't even want to go into this continuous market flow right now. It's really not the time or place for that. I'm just going to show you just right off the bat, the first half hour, we're looking for a break in a direction. But to make it even more reliable, the truth about trend here in the morning is looking at the prior day's continuous market flow. So right here, market puts in a high first, then it puts in the low. Got the first half hour, which is the initial swing. Once you break down through the low, we're going to say that the trend is down. So in this example, excuse me, let me try to take this off. Why do I have this on? Okay, there we go. Oh, man. Hey, Craig, do you have any idea why this isn't coming off? Whatever, I'll keep it on. Look at most recent active flow from the prior day is right here, right? This is today. It opens up at 9:30 Eastern Standard Time. Now coming from the prior day, you have an active low here, which is the highest active low, which I call the most recent active low, right? Once this high is taken out, this becomes an active low, a significant level. So the market opens up. You got 1, 2, 3, 4, 5, 6, 7, about the 10 o'clock bar is right here. I would not have felt comfortable buying the market if it took out the highs because the high of the prior day is right there, okay? Now, what I loved about this was it failed. It didn't take out the high, but rather took out the low right here. Once it took out the low, I'm looking to go short on a pullback, right? So right in here, if you short on a pullback, right? So it puts in this low, it rallies up off that low. I'm looking to sell at a resistance level. As you can see, the trade worked out beautifully, hit all profit objectives to the downside, put in a new low here, okay? Again, sell it on a pullback. I mean, one of the things I do use is Fibonacci retracements. I'm looking at a couple other things here in terms of giving me the resistance area in which to short in this downtrend. So once the market comes down and tests this low, this is what I call an active high in this downtrend, a significant high, right? Comes down, I'm drawing my fibs from high of the day, low of the day, the whole thing. Chances are I'm looking to get in right in here. Profit objectives, of course, sit to the downside. This becomes another active high right there. So again, this shows this principle in action. Okay, the truth about trend. Lower highs, which are what I call active highs, and of course lower lows here. It's that simple. Following what the market's doing, what I call the truth about the trend. This is it. No fancy indicators, no cluttering of the charts. All right, let's see, where is my arrow to go to the next chart? Let's see. There we go. Okay, so again, the uptrend market flow process, right? You were making higher highs, right? NH stands for new high, new high, new high, right? New highs. These stand for active lows, higher active lows in this uptrend, right? We're looking to buy it on logical pullbacks, right? Again, I use fibs, I do use the Kiltner bands, use a few other things. But again, I'm just showing the truth about the trend. This whole market flow process works. Hey Craig, can we take off these red marks? I don't know why I'm not able to do this here. I need to take these off. Hey Craig, are you there? There we go.
Yeah. That's really weird. It's like they're stuck on there. Okay, I'm not sure why, I'm not sure
Go back to
why.
the chart, and I'll just continue from the chart that I was
Okay.
on.
I don't know what happened there.
Okay, we go back further than that. We're jumping ahead now.
Okay. We're right there.
Okay, we just talked about an uptrend, right? So right in here, the initial range, first 10 bars. Gosh. Hold on. First half hour is right in here. Market takes out the high to right there, looking to buy the pullback. So again, first half hour breakout would have made money. Market comes down. You're looking for a logical support level to buy the market. And I know all of you are familiar with support levels in an uptrend, resistance levels to a downtrend. The point of this discussion is to show you the overall core structure of the truth about what you should be looking at. You need to understand price first and foremost. Okay, so when you look at a chart, again, I've already told you I look at fib retracements. I do look at the Kiltner channel bands to help give me that support level in an established uptrend. But you first need to know when the trend changes from up to down, when it changes from down to up, and that's what I'm showing you here, and that's what the point of this presentation is. It's not necessarily to get into the nitty-gritty of, okay, exactly a stop, exactly a profit. I mean, the point is to give you an overall view of the structure of the truth about trend, which is very, very important. First and foremost, strip your screens. So as soon as the market came up to here and made a new high, that was telling you that the trend was still up. The mere fact that we took out that high, the trend is up. So now we're looking to buy it again on a pullback. So assuming you got in here and you took some profits in there, right? Comes back down, we're looking to buy at a pullback. We're expecting a bounce. Well, the market never takes out the most recent active low and consolidates for a while, but I can guarantee wherever you bought in here, you would have made money in here. Market never took out that low, and look at right in here. Took out the high, right? Took out the high, came back, consolidated for a while, and eventually moved up. So that's the whole point of this. The trend was up. When the market was able to take out these highs, we're looking to buy it on a pullback. We're not looking to buy it in a pullback in here. We already bought it in here. Not until the market takes out this high, which it was penetrated right there. At this point, you're saying, okay, assuming you're neutral, you don't have a position on, you're looking to buy it on a pullback. Now, whether or not this was a deep enough pullback for you to get long, I don't know. Again, you're just looking to buy that pullback. As you can see, the market moved up from there. Okay, so a downtrend. We talked about the uptrend. Let's talk about the downtrend. The market moves from high down to low. As soon as it takes out that low, this becomes an active high. Looking to sell it on a pullback. There we go. Makes a new low here. This becomes an active low. Once this low is matched or taken out, you can look to sell it again if you're flat, right? Because it was able to take out that low, right? Same, all in here. MRAH stands for most recent active high, which is the lowest high in the downtrend. So for this downtrend to change, to potentially change, the market would have to rally up through that high. And we'll show you that in the next couple of charts here. Excuse me. So look at this. This example in here got the initial range, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? First half hour. Boy, it took the market a while in here before it took out the low. Now look at the market did not take out the high. Once it took out the low right in here, that was telling you that the trend is down. And you should be looking to go short the pullback. So now the first half hour breakout, you would have been short here. Obviously your profits would have been hit here. Flat, let's say, looking to re-enter the market. Look to enter on a logical pullback to a resistance level. Here we go. Right in here, market moved lower. Took out the low right here. Look to sell it again. Okay, pullback. Right down here. You see that? See how it works like a charm? And yes, this entire presentation is being recorded and that will be sent to you tomorrow. That's one of the questions I got. Do you close a current? Yeah, I close a current position before opening up a new position. Yes, yes, yes. All right, so that's a great example. Again, I didn't cherry pick these. These are just going back the last few days. This isn't going back and looking at charts that work to show you what worked. This is actually was taken from today and going backward, just like in the first half hour break. So a sideways market, you all know what a sideways market is, right? Relatively equal highs and equal lows, right? Market either goes up, down, or kind of goes sideways. Now, it's very rare that the market literally moves sideways like this, where you can't take out the prior high or low and it just really moves sideways, but that's one of the patterns that you always see, and you need to be able to identify those. All right? So right in this example, look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So at the 10 o'clock bar is what, 1, 2, 3. I mean, right in here, right? So we're looking for the market to penetrate either up through the high or down through the low to give us a direction. Well, you can see right here the market took out the low, right? Market immediately pulled back against you, probably between the 50 and 60% retracement from high of the day to the low, but in fact it hit resistance and came right down, okay? Made a new low right here. The fact that the market made a new low, put in a low here and started bouncing up, we're looking to go short again, based on the truth about trend. Nothing else. Look for resistance. Look at the fibs. Look at the Kiltners, mid to upper. Looking to go short. Profit objectives hit. Oh, God. Oh, man. Hey, Craig, can you help me out here? What's going on? I don't know what I hit.
Yeah, what's the matter?
Is this being recorded?
Yes, what's the matter?
Okay, this chart, I hit something and it, I don't know.
Okay, you want to move on to the next one?
I kind of want to continue this, but...
Okay, go ahead.
Oh, you're recording the screen?
Yes. Yep.
All right, let's just move it down. Okay, here we go. Sorry about that, everybody. Let me just answer the question. Let me just finish a couple of these, okay? So it comes down, makes a new low, look to go short there. Market comes down, hits a new low again here, in which when the market starts rallying up or retraces, we're looking to go short again, anywhere in here. Market comes down and hits profit objectives. Okay? Market came down, pretty much tested the low. This becomes an active high here. Once the market penetrates up through that active high right in here, the trend changed from down to up. So you can look to buy it on a pullback. Market pulls down here and then bounces up, retests, can't take it out, and goes lower. Okay, so now an uptrend reversing into a downtrend. So we've got higher highs and higher active lows, right? As soon as this most recent active low is taken out to the downside here, we're anticipating the market to turn over from up to down. So it hits this low, rallies up, we're looking to go short. And in fact, it moved lower. So to show you that example, let's take a look at this. The initial range, first half hour, is right in here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 o'clock bar is here. As you can see, the first half hour breakout worked like a charm. You would have been long right in here. Once it put this high up, assuming you're flat the market, let's re-enter the market here on a pullback. You can see it rally up. You got high number 2, right? Again, pretty simple, no indicators. Market pulls back, support level, buy it again. Makes a new high, the high of the day, in fact. Of course, if you bought the market automatically on a pullback, that would have been a losing trade. You would have definitely lost. Okay? There's a losing trade. Didn't work out here. Now, of course, this is the most recent active low right here. It was eventually taken out to the downside right there, and that changed the trend officially from up to down right here. And here now, of course, it was a slow grind to the downside. Market was making lower highs and lower lows within this range from the high of the day here to the active low, the most recent active low. But a losing trade nonetheless, okay? Don't need to elaborate. Market took out that active low. Trend should change from up to down now, in which it did. You didn't really get any pullbacks here except right in here. All right, let's see what the next chart entails. Again, downtrend changing into an uptrend, right? So you've got lower lows, right? New lows, which are lower lows, and you have active highs, which are lower highs in the downtrend. So once this most recent active high has penetrated the upside here, you're looking for the downtrend to change from down to up. So now you're immediately looking for a pullback into a support zone to be buying it. And you're anticipating a bounce. Okay, let's look at an example. Now, this is a really good example, actually. Look at the first half hour. Right, 1, 2, 3, 4, 5, 6, like the 10. Did I just? No, this okay. First half hour is right in here. Took out the low that first half hour right here. First half hour system made money like a charm right here. Okay. Put in an active high here. Right, we were selling it up in here on a pullback. Came down to a new low right here. Pulled up right in here. Did exactly like we thought. It came right back down. Then it puts in, this is the most recent active high right there. Once it's taken out to the upside right here, put in this H, right? Once the most recent active high is broken to the upside here, okay, we're looking to buy it on a pullback, right? You're buying it right in here. And look at this move up. As soon as this most recent active high, we're assuming that the trend has changed from down to up. So as soon as this high is put in place, we're buying it on a pullback. And look at that, just beautiful. Look at all these pullbacks as you make higher highs. This beautiful example. Okay, look at your own charts. All these days that I'm pulling are literally just going back from today, the last 7 days. So they're not cherry picked out of the last couple months. First half hour, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got a range in here. Market takes out the low of that range. First half hour breakout obviously made money to the downside. Let's assume you're flat and you're looking to sell it on a pullback. Okay, well, you don't really get any pullbacks. Okay, you hit this low here, and then you pull back. And then what do? Exactly what we thought it would do. Come back down to retest the low and go further. Makes a new low here, pulls back, look to go short. Well, the market did, in fact, come down to test that low again. Okay, now, you could say this is an active high, right? And actually, that was taken out right here. Okay, this active high was broken right here. Once that was penetrated right here, look to buy it on a pullback. Now, if you drew your fibs from the low of the day to this high, that was the 40% retracement, which, 0.38% retracement, which is one of the three levels, the 0.38, the 0.50, and the 0.618. Right? Those are the three main fib levels that I use. Now, that was one of the questions that was asked, and yeah, those are the three fibs. Look at that. Came down and came right back up. Right? This active low was put in place once this high is matched or taken out to this high. Right? Now, if you bought it on a pullback in here, you got some type of reaction, but you ended up coming down and taking out the most recent active low to this low and took out the low of the day. What are we looking to do as it hits this low? Well, we're looking to sell it up in here. Look at what the market did. Boom, right back down, hit your profit objectives. That high became an active high. Start the process down again. Isn't that beautiful? I mean, this is like textbook. This is textbook. I mean, I've worked with thousands of traders over the years, and I'm telling you right now that 90 to 95% of everyone I've worked with, I look at their screen, it looks like spaghetti. They're looking at everything under the sun, and they just don't make money. Strip it all down. This should be the basis of what you're looking at, okay? Now, if you want to add an indicator or two and make it your own, great. Come up with your support resistance. Look at fibs. Look at other things. Okay, but this should be the core of your analysis when trading the markets, because I'll tell you it works. Okay, so look at this example. This is a great example of it not working. Okay, which I love. It doesn't work all the time. Look, it puts in a high, first half hour, right? This is the low of the first half hour. First half hour breakout made money, right? It gave us, I don't know, 1 or 2 points. At least 1 to 2 here, right on that break. Now, assuming you're flat, you're looking to go short the market. Well, you would have been shorting about right here. Would you have been stopped out here? Again, it depends on where you place your stop, but even if you did not get stopped out, you probably would not hit your profit target here. Move your stop down to above that high. Okay, this is a losing trade, right? It did not follow through. If you sold it here, the market really did not follow through to test this low, right? Because why would you be looking to go short here unless you thought the market was going to test this low? You wouldn't. So the market came up, took out the high. Look at when it made this high, which happened to be the high of this day. Look to buy it on a pullback. I don't care if you bought it there or bought it here. I mean, you would have made money on this trade because it rallied up here, got close to testing this high. In fact, the market came close enough to this high to consider this a significant level that if it was broken to the downside, which is it was right here, I'd be looking to go short, and I would be expecting the uptrend to change from up to down as it took out this low, put in a little low, rallied up to this level, look to go short, and you can obviously see the market move lower. Again, look at this. Now, this is a beautiful example, okay? First half hour, right in here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Look at this. 10 o'clock is right here. Well, it did not take out the high. It looked like it wanted to, but it didn't. Instead, it reversed, took out the low here, put in a low here, looking to go short right in here. Boom. Beautiful trade, came down. This became an active high. Made a new low here. Look to go short on a pullback. This becomes another active high. Once this low is taken out, look at this. Makes a new low here. Look to sell it again, active high here. I mean, look at this stuff. I mean, if you don't, I mean, it's beautiful. Comes down, new low. Look at these reactions. And of course, you start to kind of consolidate in here a little bit. Look at this. This is the most recent active high right here. It's broken right here. It's at this point where you would anticipate the downtrend changing from down to up. So look to buy it on a pullback, and as you can see, the market changed to the upside. Okay, and look at this one. This is beautiful. First half hour. First half hour's high, first half hour's low. Look at it, breaks through the high. First half hour makes money on this trade. Puts in high number 2. Buy it on a pullback. So, okay, if you bought it here, let's just say you measured from high to low 50% retracement, you would have never been taken out here. Market bounces and eventually comes up and takes out the high of the day right in here. So you're not doing anything in here. I'm assuming you're already long. Profit objectives, like, you would have hit your profit objective here and definitely here. Assuming you're flat, it takes out the high of the day right here. Goes to high number 3. Look at buy a little pullback here. Beautiful. Runs up, comes down, expect a bounce. When it takes out this low here, you'd expect the trend to change from up to down there. Boy, and that's it. Let me answer some questions right now. There's a lot of charts and a lot of things that we went through. It's about an hour right now, so hopefully I'm not boring too many of you. So the first half hour breakout here. Let me just go back a few charts here and answer some questions. So first half hour break. Truth about trend, see how it all flows together beautifully. The first half hour pretty much sets the stage of the day. It gives you your first potential trade as it breaks through that first half hour's range. So not only do you get a trade on that break of the first half hour, but it also sets up the potential trend regarding to the truth about trend, and it gives you another strategy to use to enter the market, assuming that you're flat when that sets up, okay? Okay, let me see. Okay, one question is, what if the market takes out the high of the first 30 minutes, but if later in the day, the low of the day is taken out? I mean, yeah, look at, if the market, takes out the high of the day first of the first half hour, and then later in the day it takes out the low and completely reverses, that's usually a pretty good breakout trade as well, in fact. In fact, going further on that question, if the market breaks, okay, look at, if the market breaks up through the high, here, let me draw an example here. You get a range, okay? First half hour's range. Market takes out the high, you're long, assuming it hits your profit objective, even if it doesn't hit it, whatever. It goes up. And then it reverses rather quickly and takes out the low. This second penetration is even more powerful than the first if it happens real quick. So if the market takes out the high, let's say the first half hour, again, regardless if you make money or not, but it completely reverses down to the opposite extreme, that's a great trade. Okay, got stuck in this paper. Yeah, this webinar is recorded. It's entry on pullback, a market order, a pending order. Okay, pullback, I use market if touched. So if it takes out the high, comes down off, I'm using a market if touched order to get in automatically at that level. Okay, look at, given today's action, which obviously today was very bearish, right? Are you expecting more downside tomorrow? What would you hold back from taking the 30-minute break on the downside tomorrow? No, there's nothing. I mean, look at, the first 30-minute breakout is separate and independent from anything else. So it doesn't matter if it takes out the high of the first 30 minutes tomorrow or the low. I'm going with it. Okay, well, there's a loss on entry on a pullback. Again, the initial stop loss on the entry of a pullback, again, I don't want to get into specifics because I just want to tell you I use Fibonacci retracements. I use the Kiltner channel bands. Again, if I'm going short on a pullback, my stop loss is above logical resistance in that down move. And if I'm long, my initial stop loss is below logical support in the uptrend. Great. I really appreciate the great comments that a lot of you are making. Again, the 10 o'clock news doesn't affect it. It's just the probabilities of you getting at least a point or two are even higher than the 80%. How do you know which level out of the three retracements, 38, 50, and 60% retracements? Again, I do use the Kiltner channel bands in conjunction with the fib levels, and I kind of gauge which one I want to get into. Okay, again, another question. Why do you use 30 minutes, not 60 minutes? Because I use 30 minutes and not 60. It's that simple. I think 30 minutes works better than 60 minutes, actually. A lot of the craziness is flushed out in the first 30 minutes. I mean, most charting packages give you a 3-minute chart. But if you can't use a 3-minute, it doesn't matter. You can use a 5-minute. If you can't use a 3-minute, I would prefer using a 5 over a 1 minute. 1 minute's got too much noise. Use a 5-minute if you can't use a 3. The stop order is used for entry on the first half hour breakout. If you want to get it automatically as the market takes out the high or the low that first half hour, it's a stop order. Profit objective would be market if touched. I mean, I trade other markets, but for day trading purposes, the E-minis are really my main market. Great. I got Greg made a lot of money to the downside based on this method and others. Good for you, Greg. Again, I just want you all to be aware that in the next couple days, I am in fact going to be offering, my methods, my course, my mentoring in the trading room and stuff. So be on the lookout for that in the next couple days. You'll get an email from me. I really appreciate you attending. I hope you enjoyed it and got a lot out of it. Again, this is being recorded, so you will all get a copy of this. I really appreciate you attending. So I just wanted to let you know, be on the lookout for an email in the next couple of days. I'll give you some updates too on this. In the first half hour and the truth about trends tomorrow and the next day. But again, all the specifics of my course and what it entails and what's offered will be given to you here in the next couple of days. So definitely be on the lookout for that. So, if I've helped you in any way with this stuff that we've gone through here in the last tonight and the last week, then there's a lot more stuff in my program that will make you even a better trader. So I love helping traders like yourself. So let's see, lots of really good comments. I really appreciate it. It makes me feel good. But so many of you have gotten so much out of this. I mean, that's why I love to teach. I mean, teaching doesn't take me away from trading, so that's the beautiful thing about this. I love it. Brilliant. Well, good. Yeah, today was a great trade. Yeah, I showed you that first chart. I mean, the first half hour was fantastic to the downside today. The truth about trend today was just beautiful. Just everything that I teach and everything that I go through in my course worked like a charm today. Good, okay, recommendation, okay. Good, I'm glad you guys like the simplicity. I mean, this is easy stuff. It's not complicated. Chart stuff, I mean, any charting program can be utilized. I mean, there's no fancy indicator here that you need to find a certain program to use it. That's the beautiful about the simplicity of this. All right, good. A lot of you made money, or at least watched the truth about trend in the first 30-minute breakout today, and you made money. Good. Okay, we'll take some time. Good trade though. Good. I'm just reading some of the comments. I really appreciate all this great stuff. I really appreciate it. I'm glad I could help some of you out here. Yeah, so we do have a live trading room, and Craig, who's he runs the room. I try to jump in when I can, but Craig is great. He's I trained him, and he runs the room, and he's a great trader. He knows everything I know, and again, he does a fantastic job. Yeah, I mean, when I use a trailing stop, when you're knocked out of a trailing stop, obviously you're neutral, and you'd be looking to re-enter on another setup. So you got to wait for the setups. You got to be patient. Why do most people lose? I mean, 90% of all traders lose for a simple reason. It's not because the markets are so chaotic and so hard to understand. It's because most traders do not have the patience or discipline to wait for the appropriate setups, and they just shoot by the seat of their pants. They're using a bunch of different indicators. They get analysis paralysis. They're always looking at different methods because the one they're using might have had a couple losers in a row, so they abandon it and they're looking for something else. That's the reason people do not make money. If you use a methodology and you stick with it, you're persistent, and you're patient, and you're disciplined, and you wait for those setups, you'll make money. But you have to be willing to implement what I just said. I mean, it's as simple as that. I've worked with tens of thousands of traders in the last 20 years. And it's just that those are the reasons. It's not because the markets are so mysterious in nature. No, I don't use this for option trades now. There's a few questions here. Do you use a regular trading account or an IRA account? I mean, look at regular account for this. I mean, most IRAs don't allow you to go short. Do I trade my IRA? Absolutely, but based on the truth about trend principles, a little longer term. Why am I, okay. I mean, look, I like sharing what I'm doing. I'm giving you, I'm giving you this stuff because I know it's going to help you, and, because I'm going to be releasing my my program in the next couple days. That's one of the reasons I'm giving it to you. So instead of hyping up what I'm all about, I'm willing to show you what I'm all about by showing you these methods and showing you practical examples every day without cherry picking them. So again, that's one of the reasons, but I love helping traders, but I just want to show you this stuff and show you that I'm for real as opposed to hyping it up and saying this and that. So I'm giving you some meat to show you that this stuff is for real. And so if you think that this is good at all, I mean my course and program, really blows all this away. This is just kind of like tip of the iceberg. So yeah, MT4 platform does work. I mean, you can definitely use the truth about trend in the Forex. I mean, absolutely. A chart's a chart. I don't care what market you're trading. As long as you can chart it, you can trade it. The best times to day trade the E-minis, I mean, again, the first half hour I believe is the least predictable time. That's why I wait for a half hour. I wait for that range, and then I look for the break to give me that first half hour break. And then it gives me the truth about trend, the whole market flow, the starting of it. So from about a little after 10 o'clock to about 11:45, and from about 1 o'clock post-lunch, 1 o'clock Eastern Standard Time to about 3 o'clock Eastern Standard Time. Those are the best times to trade. Again, about from a little after 10 o'clock to about 11:45, and then from 1 to 3, best times to trade. All right, so I'm going to call it a night. I hope everyone enjoyed themselves. I hope you guys, most of all, I hope you all learned something a little bit more about what I do tonight. Again, this is going to be recorded and sent to you. And if you've got any questions, just post it on the blog, and I'll be there to answer it for you. And again, my intent is to teach you how to trade and be successful. Being consistently successful is the name of the game. All right. All right, you have a great evening. Bye for now. And again, be on the lookout in the next couple days because you'll get more. I'm putting together an extensive video to talk more about what I do and how you can benefit from it. So just be on the lookout for that, and I'll talk to you very shortly. Bye for now.